Hi, this is Joseph. It is Wednesday. It's June 10th. We're going to start off with the euro dollar. Pretty interesting day. Today was FOMC. So we've got this resistance point that rolls right back over here from that is June 25th, 2019. So just a little bit more than a year ago. That's the high there on the daily time frame, euro dollar. Not necessarily that that's going to cap and hold price at this point, but we just want to be aware of it. You know, it is a definite level of resistance that price at one point was finding some difficulty in that rally and that move back up here during February right into March where it stopped. So you'll notice that with that high right there from 2019, the daily candles held and stayed below that resistance level. And for the most part, they're doing the same thing. At this point, you can see that the new day has already started here with the Forex on this particular broker, this chart. And I would expect more to the upside. I don't necessarily think that this is over with just yet. It was a pretty interesting reversal after FOMC. And a pretty interesting spike. Sometimes with a lot of economic data, we see some spikes, but not all of them generate spikes. And today generated a pretty interesting spike. So, I think that looking at the markets and the price structure for a lot of these, the indices, the Forex, uh, it's easy to assume that because price is oversold or appears to be oversold, and there are signs with certain indicators that would indicate possibly that it's oversold. A lot of people are thinking, and I know because I used to do it. I used to do it all the time. That it's time to start looking for opportunities to sell it, and that's not always a good idea. This morning during the London and New York session, I sat there for quite a while watching the charts thinking, how far, if I start to put on some of these shorts at resistance, is it going to drop? So if I'm going to put on a short in an uptrend, I want to make sure that that short is going to reach a specific target. I don't want to just get in it and scalp it. Sometimes it turns into a scalp if it doesn't work out, and I have to shut down the trade right away. But initially, when I find a setup or a signal, I want to make sure that that trade's going to hit that target. So in an uptrend like this, again, I still think that there's just no reason at this point to continue to try to fight this thing. It's been, a really nice move to the upside here for quite some time, and we could see another day or two of the same thing to the upside. So I want to be careful here. I wouldn't necessarily buy it right away at the open. It might be a good strategy looking back in hindsight, right? We all do that. Initially, you want to be a little more cautious and you want to see what's going to happen next. There's a few other little areas of resistance in here that I want to be paying attention to. And these three bars right here prior to yesterday's move, I want to pay attention to that. That's kind of giving me some kind of a potential setup. So I don't want to fight this trend, and I don't want to be on the wrong side of something like this. So before I consider, and even if this ends up being a resistance point for the rest of the week, I need confirmation of that, and right now I just don't have it. If I was to look at a 30-minute chart, you can see the reversal pattern, but I'm thinking that at this point, for the next few hours or for this session, it's probably going to move right back up again into that area of resistance, and I want to see what it does when it gets close to that level. So I won't be executing any trades during the Asian session. I don't know if I'm going to have a trade here on the euro dollar during the London session, possibly. But between now and sometime during the New York session, I would expect some trades. We're past FOMC, and when FOMC comes out, sometimes things will go quite a bit sideways. And we saw that today. Things went flat for about 3-4 hours and went sideways on the smaller time frames. You can see it pretty clear. And it was just a matter of waiting for it. So you got to stay out of the way. You just got to wait. If you're in a trade, you got to wait. And here we are. So now that we've got that behind us, I'm thinking that, things are going to start to open back up again, and we're going to get opportunities to either trade it higher, or if I get confirmation that this is an area of resistance and it's going to hold for the week, then perhaps I'll start looking for those opportunities there. The markets, Forex and price has been reacting pretty well to most economic data and economic reports that I trade. I don't trade all of them. I watch them and I'm aware of them, but I don't necessarily sit around and think that every one of them is going to be an opportunity. If you've been trading for a while, you know that it doesn't work like that. So it could be a little while before we start to see, back in the old days, right? When everything was normal, we would gladly and be excited to participate in certain economic reports, especially during the New York session. I remember for years I would say that when I look at all the data and I look at all the trades that I've had over the years, the New York session generated the best results, and usually right around economic data. But then, things started to change quite a bit over the last year, and things have been a little bit more challenging, and you've got to be really more selective about the economic reports that you decide to trade. So again, I'm going to continue to watch this. I just don't know exactly. I'm thinking more to the upside here at this point. But again, if I'm wrong and it holds, I can see the possibility. So I'm going to be looking for signs that it's going to hold and it's going to reverse, but I want to be on the right side of a trade before I jump in. And again, thinking that it's just been in this uptrend like this for so long, and then signs of oversold conditions, or I'm sorry, overbought conditions, it doesn't necessarily mean we've got to start looking for sell opportunities. You can get stopped out quickly by thinking that when it's in a really strong uptrend, and you just have to trust the trend. Pound dollar daily time frame. It is sitting right in here. You can see this little area of resistance. This is the 1.2764 area. And this level has been here for months. Like I haven't moved these levels for quite a while here. And you can see the shape of the candles and the way it's moving. Things are starting to slow down up here. So I don't know how this is going to play out. I still think that it's in an uptrend, and I still think that it could go higher. But it is finding a temporary level of resistance here. Of course, there's some divergence here with the CCI and a few other indicators, but again, that's not necessarily enough for me to immediately start looking for shorts. The first sign of a reversal pattern on a 30-minute chart is not something I want to take right away if I still think that this trend is likely to continue higher. It is possible that it could just push right through it and spike one more time into this area right here, and then sort of find an area of resistance before it slows down. That's a possibility. So I'll be looking for that. I still think that it's going to go higher. I will probably trade this during the London, if not New York session. So, I would prefer to stay away from it during the Asian session. Things are relatively flat here and sideways. Yesterday's candle really wasn't too big. I mean, it wasn't a very large trading range, not like, some of the other days that we've had here in the past. And I can see that things are starting to slow down here. So I would expect the Asian session to be a little bit slower here too as well. Dollar yen, we can still, I continue to expect that this one's going to, the dollar yen, continue to move to the downside. Yen strength, dollar weakness here at this point. I still think that it's likely to continue. However, there is a pocket of support running right through here where it stopped. So if I was to transfer this all the way out, that is my support level right there. It almost stopped right on the number. So I'm going to pay attention to this one. While I still think that it could go lower, it may just end up bouncing and coming right back up and trade right. Let me open this up. Right inside of this range right here. So let's get these levels. So I've got this low right here, which is the support where price stopped today. And that's approximately 106.98, right around that range, 107. So it could bounce and trade, right around 107, 107.50, somewhere right around this range. I've got this uptrend, and it wouldn't surprise me to see it move right back up, and at least approach that uptrend line, the bottom side of it somewhere. That's a possibility. I don't know that it's going to do that, and I wouldn't trade it right now and place and execute an order on something like that, but I would be looking for signs of that possibility that it would trade in this range and maybe move sideways. This one's a little bit different than what we see with the euro dollar and the pound dollar, and for obvious reasons. So I'm going to be careful with this one. At this point, though, I'm going to leave it there. I don't really see anything. Like I don't really want to trade the dollar Swiss. The dollar Swiss, there's nothing wrong with it in the last 2 days, but for the last few weeks, I've been staying away from it. I really don't like the way it moves. This is the dollar Swiss daily time frame, and I would prefer to not look at it. But however, if I get really fewer trading opportunities here with the pound dollar, let's say this one goes sideways and stays in a pretty tight range on Thursday, and if the euro dollar does the same thing, it is possible that every once in a while we see one of these currencies break out, and it's time to trade it. So it is something that I would consider. I like trading the dollar Swiss. I don't mind. I just don't trade it that often. So I will keep an eye on it now that it's starting to open up here. But again, if I don't have to trade it, I'd rather focus in on some of the others that move a little bit more and are a little more, the movement is a little more consistent throughout the time that I'm in the trade. There was a couple of opportunities. I considered trading the dollar Canadian before FOMC. It started to move up, and there's a level that I was thinking about getting in, and I thought, this doesn't look right. It looks way too heavy, and it rolled over sharply, and it would have stopped me out right away. It didn't look right. I could see the pressure, and it rolled over and dropped pretty fast. So it wasn't an opportunity. If you use the trade copier, for example, that I don't get in the split second that the news is released. Sometimes you can trade on some of those spikes, which is dangerous. Like today, if you tried to trade on some of those spikes and you traded it up and down, you don't always get a fill where you expect. In many cases, your broker can really play around with what it is that takes place on your platform. So there's all kinds of technical issues that and broker issues that can take place. So again, if I'm going to get into a trade, I'm going to wait 3 minutes, 5 minutes, maybe 10 minutes, sometimes a little bit longer. Sometimes I'll even wait 30 minutes. It really depends. But I don't get in the split second that the news is released. That's a dangerous situation, and it gets pretty hard to control the trade, especially when I can't see what you see on your platform. It's possible that your broker could freeze the price, but there's nothing wrong with my platform. I execute a trade and you're going to get a horrible fill. You'll get a fill that's nowhere near mine, and the broker is going to be more than happy to fill you at that level. So there's just all kinds of really bad things that can happen trying to trade right around the news the split second that it's released. So I wait a little while, and I stayed away from that dollar Canadian, but I'm going to keep looking for opportunities on the dollar Canadian. I don't get that many opportunities on the dollar Canadian, so I wouldn't expect, please don't expect to trade every day on the dollar Canadian. It's certainly not something that I focus on. I focus on the majors more often than the others. So I'm usually looking at the euro dollar, pound dollar, dollar yen, and then maybe the yen crosses at certain times. And then after that, I'll start looking at the Australian dollar and the dollar Canadian. Sometimes, the majors here, the four majors, the dollar yen, dollar Swiss, pound dollar, euro, dollar, they might be in relatively tight ranges of consolidation, but then the dollar Canadian might give me a really good opportunity. So I'll keep an eye on it. I do, I've been saying this for a while. We are approaching summer season, and I usually get really, really good trading opportunities throughout the season. We usually earn a higher number of pips per month during the summer, and I expect that. It does not mean that we're going to have trades every day, and it does not mean that I'm going to have hundreds of pips every day or whatever the situation. I mean, we're going to run into FOMC, we're going to run into non-farm payrolls, we're going to run into certain events. They're going to cause the market to go into consolidation for maybe a day or so, or even a few trading sessions. And during those sessions, if it's in consolidation and it's just going sideways, then there's nothing for me to do. Perfect example of that was the pound dollar today, 30-minute time frame, just prior to FOMC. And you can see here for a few hours, it was doing nothing. This is what I'm talking about. So when it starts to move like this is a 30-minute chart. So there's about 3.5 hours here. It's just kind of going nowhere. There's nothing for me to do. I won't trade that. And it never fails that I get like 3 or 4 emails almost every single day during sessions like this. And they're saying, how come you're not trading? How come you're not trading? Why aren't you trading? So again, for new individuals, for new traders, when you see price moving like this, especially if you go down to some of the smaller time frames, there really isn't anything to do here. On this pair, obviously, I'm not saying that it was that way on all of the currencies. It isn't, and it wasn't today. But very often when you see this, and it's maybe just before a major economic event, and you see it on several currency pairs, then you know that the market's reacting to it, meaning that they're much more cautious. Nobody wants to open up really any new positions at this point in time. They're either going to hold on to what they've already, the positions they've already got open, or they're waiting for the reaction so they can trade it after the news. And that's why things start to go sideways. You see volume levels dry up. You see participation. There just really isn't any, and it starts to go sideways. So when you see price moving sideways for a few hours like this, you know that there's nothing for me to do. The high to the low there on that one was 63 to 44. I mean, there's really nothing to do here. And I'm not going to scout for 2 or 3 pips every 5 minutes on something like that. That's just not how I do it. So that's not my trading style or my system. So again, just be mindful that, even though I'm saying that we're going to have a really good summer, we will have a good summer, but it's a matter of looking back at the end of the week, looking back at the end of the month, and then realizing that we're going to get days like this. We're going to get days where things just go sideways, and then we're going to get days where we get to step up and make a lot of money because there's a lot of momentum, a lot of breakouts, and a lot of activity. It just moves in cycles. That's the way it works. And if you're not familiar with it, if you're relatively new to this business and you're not too sure how that works, you'll see it. You really will. After enough time, you'll get the hang of it, and it'll start to make a lot more sense. And that forces you to be a lot more selective about your trades. You don't want to be jumping in and out all the time when nobody else is doing it. Everybody else is just kind of sitting back watching, and there's just always a few people that are jumping in and out trying to trade all of this. And very often it leads to nothing. So you got to be careful with that. So it's just a matter of waiting. Patience makes the trader, as they say. And so I'll leave it at that. I'll send out the next update at this time tomorrow.